Some examples of qualitative characteristic number 6, understandability. Let's look at the first one. The accountant for a business has provided the owner with the following information. There's some financial indicators and some results. GPM, MPM, ROI, ROI. Now we're going to learn what each of these are. Okay? I guess what you want to ask yourself is with understandability, is this acceptable? Would a business, so the first issue I see is, would a business owner with a reasonable knowledge of accounting understand or comprehend what these acronyms stand for? And that's a tough one. You could argue one way or the other. I think what you want to do is fix that and go, well, they might actually know what these are. They might just not know these acronyms. So why don't you spell them out? You could argue that these are jargon or complex terms. So I'm actually going to list their names. Gross profit margin is GPM. Net profit margin is MPM, etc. I think the next thing or issue is, all right, well, now you know what the names are. What do these results mean? Like, are they good? Are they bad? If you just list them, would a reasonable person, with a reasonable knowledge of business and accounting understand or comprehend these numbers? Probably not. So how could you fix that? Well, you could argue these are jargon or complex, but not clear. Why don't you actually specify what they mean? This 41% number, that means for every dollar of net sales, we earn a gross profit of 41 cents. What about this one? Inventory turnover, 37 days. Well, what does that mean? It means it takes the business, on average, 37 days to sell all its inventory. Now someone can comprehend its meaning. So that is where you're avoiding the jargon and you're sort of explaining things clearly and concisely. What about this example? All right, we've got those businesses has provided its shareholders with the following information. We've got accounts payable, accounts receivable. These are just alphabetical order. We've got bank, capital, inventory, IT equipment. We've got a loan. We've got a mortgage, premises, and a vehicle. Is this understandable? Well, no, that's just financial data. That's just the items. They don't mean anything. So in business, the way something is set out makes it understandable. We're going to take the exact same information, okay, this data, and we're going to, because I don't think a shareholder is unlikely to understand that just as it is. So what we'll do, turn it into a balance sheet. A balance sheet is like understandable. I think most people in business can understand a balance sheet. There's the asset side, there's current and non-current, we title it up. There's current and non-current liabilities, and then there's owner's equity or capital, and we title it up. That is more understandable. We could probably extend that example and go, hang on, all right, well, that's a balance sheet. That's the exact same balance sheet from the previous example. Is that understandable? You could say, yeah, but what you could actually make it more understandable. You could argue someone with a good knowledge of accounting and finance might sort of know some of the numbers, but to make it a little more clear and concise, there's going to be shareholders who aren't financially literate. So why don't you do things to help them? Why don't you put in some little asterisks here next to the current? What's current and non-current mean? Maybe someone doesn't understand that. So you explain current assets are those that are expected to be converted to cash, sold, or consumed within 12 months. And non-current assets are the ones that are going to be the same, but after the next 12 months. And then you explain with an asterisk. Current liabilities are the ones that are going to be paid within 12 months. Non-current are the ones that are going to be paid after 12 months. Owner's equity, what does that mean? That's a tough one to explain. We'll look at that in a later video. It's the owner's residual interest in the assets of the business. That's such a clunky definition. It makes perfect sense, but it is not really understandable. So I always express it as it's what the owner actually owns of the business and not what other parties own. That's how I'd express it to make it more understandable. I think a better way to do it, and we're going to look at something in the next chapter called the accounting equation. Your assets equal your liabilities plus your owner's equity. Express that as a graph. That business had assets of $465,000. That's what we own. Okay, I think a really good way to make this more understandable is go, well, actually, we've got quite a bit of debt. Out of everything we own, other parties called liabilities own $270,000, and the owners only own this bit. So just to go back a step, we simplified this from, first of all, a list of financial data that meant nothing, turn it into a balance sheet. Then we explain the terms in the balance sheet with some asterisks. And not only that, we gave the user this nice graph which shows your assets must equal your liabilities plus your owner's equity. And now when you look at that together, all those things have made it much more comprehensible. And that is what understandability is. Can the user comprehend the meaning of what you're showing them?